New data from Redfin is showing a dramatic shift in the housing market in 2025 where houses are not selling. They're sitting on the market for the longest that they have in 5 years, and this is now causing sellers to freak out. With Redfin reporting that the typical home is now taking nearly 2 months to sell, the slowest pace in 5 years. This DOM is up to 54 days and nearly double what it was 3 years ago at the pandemic peak, indicating that this housing market has fundamentally changed. It is now becoming a buyer's market. Buyers have the leverage. Buyers can choose between houses that are sitting on the market, and sellers are now the ones missing out. With Redfin reporting that the months of supply on the market is now also up to 5.2 months. This is up since last year and is the highest months of supply that we've seen since 2019. However, there's something funny going on in this market, everyone, because even though the DOM and the months of supply is skyrocketing, sellers are still refusing to cut the price on a national basis. The prices are still going up, even with record low levels of demand, and even with these houses taking forever to sell. Because the same Redfin report is showing that the median asking price for houses is up 5.2% year over year. So these sellers continue to get greedy in 2025, thinking that the market is favorable to them or thinking that they can get a price that's above market, and they can't. And we're at this crossroads, sort of a very strange crossroads in the housing market for you as a buyer right now or prospective buyer, where all the forward-looking indicators are very clear. There's a market downturn occurring. Prices should be going down. But yet, sellers are refusing to give in to that notion, and many of them still have some underlying optimism that prices are going to continue to go up. And so some of these sellers just can't get out of their own way. This is a great example of a seller in a house like this, everyone. This house is actually I'm going to tell you actually where it is in a second, but I want to show you how long it's been sitting on the market. It's been on the market 108 days on Zillow. So that's almost 4 months. And you could see it's a nice house. It's a flip. And they originally listed at $875 and have only cut the price 25 grand since then. And actually, they've been doing some crazy things with the price on this house. It originally sold in February 2023 for $740. Then they cut the price. Then they increased it by a lot. And this is actually a great example of what's going on in the housing market right now. Owners don't want to admit that they're going to lose some money or that their equity is going to go down. And so they try every different thing. They try to rent it. They try to put it back on the market. They cut the price, then they decide maybe we should renovate it a bit and put it back on the market at a higher price. They're doing everything but admitting that maybe the market has really slowed and that the buyers just aren't there. And what was additionally scary about this Redfin report, everyone, was what they said about pending home sales. So pending home sales is one of the main metrics Redfin uses when they do these weekly housing market reports. And I actually really enjoy these weekly reports from Redfin. They're a great pulse on the housing market. Well, this report said that pending sales were down 9.4% year over year, the biggest decline since September 2023. And this is really concerning, everyone. Why are the pending sales down 9% year over year? We were told that the sales should go up with the rate cuts. We were told that the sales should go up after the election was over, but yet the sales are just going down even more. And this is coming after 2024 where home sales plummeted. According to Yahoo Finance, existing home sales in 2024 hit their lowest level since Val Kilmer was Batman. For those that aren't aware, Val Kilmer was Batman in 1995. So we had the lowest home sale level since 1995 in 2024. But as I'm sure many of you are aware, our population in 1995 was much lower than it was today. So in percentage terms, 2024 was actually the worst year for home sales going all the way back to 1982. So in 2024, only 4.7% of homes changed hands in America. There's 86 million homeowners, 4 million homes sold. That relative percentage was the worst since 1982 and the second worst since 1970. So we're literally in uncharted territory for how low the demand is right now and for how sellers are unable to sell their houses. Now, some of this has to do with the mortgage lock-in effect, which I'm sure some of you have heard about. It's the fact that a lot of people refinanced their homes at super low mortgage rates during the pandemic, 2.5% rates, 3.5% rates, and they don't want to sell their homes in the new market, and it's cost prohibitive for them to even do that and buy a new home. They'd have to take on a 7% mortgage rate. So that mortgage lock-in effect is one of the reasons why the demand is low, but the bigger reason is that prices are just too high. And this is the thing a lot of sellers in the housing market still haven't figured out, is that it's their sky-high price and their sky-high asking price that is scaring the buyers off and is the reason they can't sell. Because what we're looking at here, everyone, is inflation-adjusted home prices over the last 70 years, according to data from Case-Shiller in the Bureau of Labor Statistics. And what do you see? Well, the Case-Shiller inflation-adjusted home price index is around 202 to end 2024, entering 2025. Now, the long-term average going back 70 years is 121. And you can see from 1953 all the way to the late 1990s, over 50 years, prices just didn't grow relative to inflation. They simply kept pace with inflation. But then we had housing bubble 1, where prices went up way more than inflation. Then there was the big crash. Now we have housing bubble number 2, where prices went up way more than inflation. And one thing I feel pretty confident in saying is that this situation won't last in the long term, where home prices are at such a level that's disconnected from the fundamentals in the economy, related to inflation, related to rent, related to income. There's nothing that justifies the current prices in America. The only thing holding on to these sky-high prices is the attitude of sellers. And one thing from a practical standpoint that the housing market might need to bring these sellers back into reality is a little bit of negative news. Because I think when a lot of these sellers see their stock portfolios still so high, when they see the optimism over the presidential election, they don't think in terms of like, oh, I can lose money on my house. They don't think it's possible, even though the data in their market might be saying it's possible. I want to go back to this Redfin article again, everyone. This is a treasure trove of information. And look at where homebuyer demand has gone down the most in the last year. Because this is going to be a cruel wake-up call for sellers. Where are pending sales down the most? Well, in Miami, pending sales are down 25% year over year. I want you to think about that. 25% year over year. The sales in Miami last year were already really low, and now they're at the lowest level in a decade. Sales in Atlanta, down 23% year over year. Sales in San Diego, down 20%. Sales in Houston, down 20% year over year. And I just have to show you this data in Miami because it's so fascinating. So this green line from Redfin is the pending sales so far this year, around 417 per week in Miami. During the pandemic, the same week, there was over almost 1,100 pending sales. So the pending sales are down 61% from their pandemic high. And they're also down about 20% from pre-pandemic levels. But amazingly, the prices in Miami haven't dropped yet. In Miami-Dade County, in particular, prices are still up 4% year over year, according to data available on Reventure app. They're flat in Broward County. They're down slightly in Palm Beach County. We're not seeing the collapse in prices you would expect from the collapse in sales. Take a look at this, everyone. Take a look at this. Here we're looking at the home value growth year over year in all the different counties in Florida. And we actually got all the counties in America here on Reventure app. You guys should definitely check out this data for your up-to-date home value statistics. But in Miami-Dade, we're up 4%. Now, in Naples, we're down 3.5%. In Cape Coral, we're down 5.5%. But in Miami, we're still up 4%. In Palm Beach, we're down 0.5%. But what's crazy and why I think values are going to drop more in these areas to go forward is the inventory. Inventory in Palm Beach is up 40%. In Broward, it's up 60%. In Miami, it's up 41%. In Naples, it's up 44%. All across Florida, the inventory is just going through the roof. In Orange County and Orlando, inventory is up 50%. So we now have almost the highest level of inventory in 7 years in Orlando. In many of these counties, we have the highest level of supply in 7 to 10 years. And so what I think is going to happen, if I'm going to make a prediction here for the housing market in 2025, is that these sellers are going to be in for a rude awakening in the spring housing market. And that many of these sellers who are overpricing their houses again this year, they're going to have to cut the price and cut the price fast if they want to sell. And if you are a prospective seller, please listen to what I'm telling you here. Please pay attention to the data for your market, because if the data for your market is saying supply is way up, days on the market is way up, that's saying that you should not overprice your house. And one thing I'm going to be watching this year is for markers of distress. Are we going to see more distressed sales? Because distressed sales are the type of sales that cut through all of this nonsense, of sellers not wanting to accept reality. Is when there's actual distress, when a homeowner is in default on their mortgage, or if they lose their job, or if an investor is forced to liquidate a portfolio, or if a builder has too many homes on their lots and needs to clear them. When you see that distress, that tells you pretty quickly where the market price is for real estate. And when those transactions begin to sell more, that's going to force the other sellers on the market to understand where the market is. Now, where are we on distressed sales, everyone? Let's take a look at some mortgage and foreclosure statistics, because this is important to understand. This data comes from the ICE Mortgage Monitor. You can see overview of mortgage performance. They're saying foreclosure starts are up 12%. Some of this has to do with hurricanes Helene and Milton in Florida, increasing mortgage defaults. You can see on a national level, the delinquency rate was down 0.8% for the month, but up 6% year over year, with serious delinquencies rising month over month and rising 7.3% year over year. While foreclosure activity remains muted due in part to 70% of serious delinquencies still being protected from foreclosure by loss mitigation. And you can see here the historical graph on delinquency rate going back 20 years. You can see delinquency rate has gone up from its pandemic lows, but it's still fairly low compared to the historical norm. And these foreclosure protections, everyone, I'm paying close attention to them now with Trump as president, because I suspect, and this is just speculation on my part, I suspect some of these foreclosure protections could go away, particularly the forbearance and loss mitigation. We'll have to watch those closely. Trump's new head of HUD is Scott Turner. He's a representative from Texas. He hasn't indicated yet what's going to happen with these foreclosure protections, but if Trump's other policies are any indication, he seems to be wanting to reduce government involvement in different aspects of the market. He wants to reduce government involvement and red tape, which could mean we see at some point in 2025 some of these foreclosure protections lifted. And if they are lifted, we could see maybe an avalanche of foreclosures. There's 300,000 or 400,000 of these serious delinquent mortgages still blocked from foreclosure by rules put in place from the Biden administration. This, to me, is actually one of the biggest stories to track in 2025. What is Trump going to do? Now, what I would encourage you guys to do, if you want to track the market and really understand the data for your area, data on Reventure app allows you to do that. Head to www.reventure.app, type in your city, start immediately accessing this data for free. Inventory data is for free. Home value growth data is for free. And then when you're ready, you can upgrade to our popular data, which includes our home price forecast, our overvaluation rate, and our cap rate for investors. All that data is available under a premium plan for the cost of only $39 a month, a small fraction of the cost of buying a house in America. Ultimately, a very affordable price for achieving peace of mind about the direction of your real estate market if you're a buyer or investor in 2025. Head to Reventure app right now to access the data.